after the peak has occurred. But of course, according to Hurst cyclic theory and the mathematics of combining the multiple cycles that influence the price movement of financial instruments, of course, price does not have to move down for anything near half the cycle wavelength. So, in fact, this is a very valid analysis, and what has happened since that 4.5-year cycle peak? Well, we've had 2 full cycles of the full to 18-month cycles, and so the peak on the 6th of September this year, I suspect, is in fact a peak of 18-month magnitude. So the big question is, what is going to happen now in terms of the price of gold? Well, I've been saying on ST Outlook that I expected price not to exceed the peak on the 6th of September for at least several months. So we're now 2 months after I made that call, and indeed price has not exceeded that peak. So I think that analysis is still very much on track. But let's have a look at what we expect in very crude terms to happen. I think that of course this peak here in March of 2008, I think it was March of 2008, was a peak of the 4.5-year cycle. We've had 2 full 18-month cycles since then. There they are. So what's going to happen next? Well, we expect to have another full 18-month cycle, and we expect gold to reach an even more exciting, in other words, higher peak sometime in 2013. It's as simple as that. So what am I saying about gold? I'm saying that the peak in September was really important. It was of 18-month magnitude. I expect, however, that price is going to exceed that peak sometime within the next 18 months, or we only have about 16 months left, and I expect the price of gold to form an even higher peak in sort of mid-2013. Now, I said right at the beginning, it's really important before you talk about an analysis that you talk about your time frame. The time frame I'm talking about here is the 4.5-year cycle. So I'm saying by 2013, we're going to see higher prices in gold. In ST Outlook, I've been saying I'm a bear for gold, but that's because my time frame is shorter. My time frame is much shorter in ST Outlook, and it's very important to remember that. That when you talk about being a bear or being a bull, you always need to say over what time frame you're speaking. A message from John. Analysis sometime 2006, last 60-month peak. I'm unsure, but the longest cycle. You may be right about your preferred. I agree the 20-month peak was made in September. Okay, great. So yes, I must say just to sort of build on what John said. For a long time, I thought that the 60-month peak was the first analysis that I showed you, but I have recently converted, if you like, and decided that in fact I think this is the more likely scenario to play out. Now, for those of you who aren't very experienced with Hurst cyclic theory, and I'm delighted to have a range of people. I've had a brief look at the names, and I see some people who are real Hurst experts, and some people who are beginners. So I'm delighted to welcome everybody here for today's session. But for those of you who aren't Hurst experts, you might be saying, all this discussion about is it a peak of the 18-month cycle, or is it a peak of the 54-month cycle, and how does that help you when you're trading? Well, in fact, it helps you tremendously, because what you need to do is you need to concentrate on the time frame that you are trading. That's the really important thing, and the time frame that I trade, the longest time frame that I trade is the 40-day cycle. Okay, so whether this peak on the 6th of September was a peak of the 18-month cycle or a peak of the 54-month or 60-month cycle is to some extent an academic discussion when we're talking about the 40-day cycle. I say to some extent because, of course, the underlying trend of the 40-day cycle is going to be changed, whether this was a trough of the 18-month cycle or a trough of the 54-month cycle. However, the good news is that the underlying trend of the 40-day cycle is in fact only going to be changed by a number of 1, if you like. Okay, because there's only one cycle difference between 18 months and 54 months. And when you are considering trading, Hurst always used to say that you should only consider the 2 cycles longer than the cycle that you are trading. So let's have a look at that 40-day cycle. And here's a real mind-bending exercise. And that is to have a look at the shorter term cycles in terms of the cycle shapes as they play out in an inverted analysis. Let's see how this cycle shape works out. So you start from a peak, draw a line down to the first trough, then draw a line up to the intermediate peak, which is of course the peak of the 20-day cycle. Then draw a line down to the second trough, and then draw a line up to there. So what I've tried to do is I've tried to replicate price in a simplified wave shape diagram. Okay, so that's the first 40-day cycle that has played out since the 6th of September peak. And is it a well-behaved, a well-shaped cycle? Yes, it is, because the underlying trend for this 40-day cycle is strongly down, right? Okay, because if that was a peak of the 80-day, 20-week, 40-week, and 18-month cycle, that's 1, 2, 3, 4 cycles that are all pressing down. So that's at least -4 underlying trend. Okay, so our underlying trend is -4, and therefore we would expect our troughs to occur certainly in the second sub-cycle. Troughs occur late, and peaks would occur early. So it's a well-shaped cycle. Let's have a look at this next 40-day cycle, which is playing out at the moment. The shape of that is from the first peak down to the first trough, up to the intermediate peak, and then down to the second trough, and then up to the final peak. Okay. Now, here's an interesting thing. That cycle shape, and let me just draw a dashed line there to separate the two cycle shapes. That cycle shape exhibits the shape of a cycle that does not have a negative underlying trend, but it in fact has a positive underlying trend. That's interesting, and that bears testament to Hurst's consideration that you should only consider the 2 cycles longer than the cycle that you are trading, which in this case, of course, would be the 80-day and the 20-week. So the 80-day cycle here is pushing back up again, right? So we would add 1. The 20-week cycle is still coming down, so that's -1. That gives us an underlying trend of 0, which is neutral, which means that this cycle shape is in fact a well-shaped cycle for a neutral underlying trend. So all the pieces of the puzzle are fitting together quite well. What are we expecting? Well, if we have a look at this analysis, you'll see that Sentient Trader is expecting a peak of the 80-day cycle, the first 80-day cycle since the peak in September, on September the 6th, and let's measure that distance. So far, 63 days have elapsed, and let me count those bars. I quite like counting the bars because then you can just leave the bar count on there. That's really useful if you're working intraday. You put a bar count on there, and you know, as your charts update, so your bar counts keep updating. Okay, so there have been 63 bars since the peak on the 6th of September. How long do we expect the current 80-day cycle to be? Well, the nominal length is 68 days, and in fact the average length is 68.3 days. So, so things are looking very good. This is a perfectly behaved market. So what are we expecting? Well, we're expecting price to keep rising, in fact, and to form a peak sometime within the near future and within the next 5 days. And before anybody asks me whether that's trading days or calendar days, I should remind you it's calendar days, of course. Hurst cyclic theory always uses calendar days. So 5 days from today is, I believe, Sunday. So a peak in the price of gold is expected to form on Sunday the 13th of November. You might ask me, how is it possible for a peak of price to form on a Sunday? Well, that's because, according to Hurst cyclic theory, it doesn't matter whether we're trading the commodity or not. A peak of the price of gold could well form on Sunday, but of course we won't know about it because we won't have any records for Sunday because nobody's going to be sitting up trading gold. We're all going to be taking a weekend, but on Monday we might see evidence of the fact that a peak has formed. Of course, a projection would never be, one can never be as specific as saying one particular day, but let me just zoom out a little bit and show you what the 40-day pattern projections are saying. The 40-day pattern projections are saying that price is already within the time zone to form a peak. It has just edged into the bottom of that box. The bottom of that box, I think you can see there, ranges from 1798, and yesterday the high in price, this is the futures contract that I'm looking at here, the high in price was 1804, so it just popped itself into that box. So we are already within the target zone, and we're expecting, after price forms a peak, we're expecting price, of course, to move down. Now, I'd like to point out something about this projection box. Do you notice how the red color that fills that projection box bleeds beyond the top of that box? That means that is a box that has no top. That's how I always think about it. It's a box that has no top. That is because, in fact, we are expecting the price movement to extend beyond this projection box, or certainly to the upper regions of this projection box. So price could, of course, turn around today. It has satisfied that projection, right? It's popped up above 1798. It has fulfilled the projection. It could move down today, but I'm not going to be surprised if price rises up, to the sort of 1850 sort of region towards the end of this week or early next week. I'm not going to fall out of my chair. I'm expecting price to keep rising. How will we know when this peak has formed? Because I believe, of course, a peak is going to form. Well, we'll look at the FLDs and we'll look at the VTLs. Let's see if we've got any VTLs